Here are the crypto top headlines covered in this video. SEC Commissioner Mark Uyeda slams agency's crypto policy as a disaster. Next, Senator Hagerty introduces clarity for Payment Stablecoins Act of 2024. Also, bipartisan support for crypto is fragile, says Congressman John Curtis. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, SEC Commissioner Mark Uyeda slams agency's crypto policy as a disaster. The SEC's Mark Uyeda says the regulator's approach to crypto has been the wrong one, and it needs to provide clear guidelines before launching enforcement actions. The United States Securities and Exchange Commission's approach to regulating crypto is a disaster, and the agency has done nothing to clarify rules, SEC Commissioner Mark Uyeda said. Uyeda said during an October 10th Fox Business panel that SEC Chair Gary Gensler has been enforcing crypto policy without ever providing clear rules or guidance for crypto firms to follow. Our policies and our approach over the last several years have been just really a disaster for the whole industry. We have been sending this policy through enforcement. We've done nothing to provide guidance on it, and as a result, this has been achieved by the courts, and different courts have ruled different ways, Uyeda said. Uyeda's comments came a day after crypto exchange Crypto.com sued the SEC, saying the regulator issued a Wells notice, a document warning of a potential enforcement action. In the lawsuit, the Singapore-based crypto exchange alleged the SEC overstepped its authority and challenged the regulator's view that almost all cryptocurrencies should be considered securities. Many in the crypto industry have criticized Gensler for what they claim is a harsh and largely unclear approach to regulating crypto in the U.S. Gensler has repeatedly said that crypto firms need to comply with securities laws, but many have rejected the demand, claiming the SEC's rules are unfit and impractical for crypto. The approach we're taking appears to be the wrong one, Uyeda said when asked about the efficacy of the SEC's digital assets policymaking. We need to lay out some clear guidance and interpretations on what falls within and what falls outside the securities laws, he said. Uyeda remained tight-lipped when asked about Gensler's personal motivations behind his approach to crypto enforcement, but conceded that Gensler maintains a perspective on how best to regulate crypto. Uyeda and fellow Commissioner Hester Peirce often vote for more progressive crypto policy moves, but he says the agency is ultimately ruled by what Gensler believes to be the correct course of action. Within the agency, our agenda is directed by the chairman Gary Gensler. The staff all follow his lead, says Uyeda. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Senator Hagerty introduces Clarity for Payment Stablecoins Act of 2024. The new bill is a refinement of Representative Patrick McHenry's 2023 bill, which has bipartisan support. United States Senator Bill Hagerty is building on House member Patrick McHenry's stablecoin legislation. Hagerty has released a discussion draft of the Clarity for Payment Stablecoins Act of 2024 with a few refinements of McHenry's 2023 bill of the same name. McHenry is retiring at the end of his current term. Hagerty, a member of the Senate Banking Committee, acknowledged the new legislation's debt to its predecessor and emphasized its key differences in a statement. Tweaking a consensus. The most dramatic change in Hagerty's bill as compared to the 2023 version concerns the role of states. In a final section titled State-Level Regulatory Regime, which has no analog in McHenry's bill, Hagerty specifies that stablecoin issuers that have less than $10 billion in market capitalization can be regulated at the state level. Issuers of stablecoins with larger caps can seek waivers to allow them to remain under state rather than federal regulation. In addition, the bill changes the federal agencies that supervise some issuers. Hagerty said, "These key provisions and other technical modifications strengthen the state pathway to stablecoin issuance, establishing a tailored regulatory regime that most effectively facilitates innovation and protects consumers." The 2023 stablecoin bill passed out of the House Financial Services Committee with bipartisan support, but negotiations continued. Committee ranking member Maxine Waters released a statement in September expressing her satisfaction with the bill. "Before the end of this year, I want us to strike a grand bargain on stablecoins and other long overdue bills. Since 2022, we have been working for hours on end to reach an agreement and have each made concessions." Waters went on to stress the important role of the Federal Reserve Board in supervising stablecoins. Not the lone voice on stablecoins. Hagerty introduced the Stablecoin Transparency Act in 2022 during the previous Congress. That bill notably defined stablecoins as securities, which the 2024 bill explicitly does not. Stablecoin Transparency Act did not make it out of the Senate Committee on Banking, Housing, and Urban Affairs. Pro-crypto senators Cynthia Lummis and Kirsten Gillibrand also introduced stablecoin legislation in April 2024. At 179 pages, their Lummis-Gillibrand Payment Stablecoin Act is more than triple the length of McHenry's and Hagerty's bills. The Lummis-Gillibrand bill is still being considered by the Senate Committee on Banking, Housing, and Urban Affairs. Hagerty is accepting comments on his draft bill through November 1st. Our next top headline: Bipartisan support for crypto is fragile, says Congressman John Curtis. 71 Democrats joined their Republican colleagues in a rare bipartisan effort to appeal the SEC's SOB 121 guidelines from earlier this year. Congressperson John Curtis, a United States representative for the state of Utah, took the stage at Permissionless 3 with Utah Senator Mike Lee to discuss the future of digital asset policy in the country. When asked if the bipartisan cooperation on the repeal of Staff Accounting Bulletin 121, or SOB 121, which made it incredibly restrictive for banks to custody crypto, was making a comeback, the member of Congress responded, "I think so, but it's very fragile." He continued, "I think it's really important for all of us, all of you, as you push this issue in Washington, to realize if it becomes a partisan issue, we will have a very, very difficult time. Anything in Washington that becomes partisan struggles. So, I think it's important to find connection points with Democrats to reach a consensus on regulatory policy," Curtis concluded, before noting that fellow lawmakers had trouble understanding the complexity of cryptocurrencies. Curtis then called upon industry professionals to educate lawmakers and carefully explain the technicalities behind the crypto industry to dispel lawmakers' fear of the unknown. Senator Mike Lee weighs in. Senator Mike Lee asserted that the three worst things that could happen to cryptocurrencies would be for the U.S. Federal Reserve to create a central bank digital currency, or CBDC, a move already facing opposition in some states, such as North Carolina and Florida, overregulation by the federal government, and conflicting state-by-state regulations. Lee characterized letting states decide their crypto policies as death by 50 cuts for the industry and made it clear that digital assets are a new type of asset class requiring novel regulation. Cryptocurrency is not a security. Cryptocurrency is not a commodity. Cryptocurrency is used as a medium of exchange, the senator told the audience. "I don't even think we should tax the capital gain on the transfer of it," Lee said. The Utah senator concluded by stressing that for innovation to thrive in the crypto industry, the government must resist the temptation to overregulate or throttle the nascent sector. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.